bring in Liz Young, head of investment strategy at SoFi. Liz, I can't remember the point that you made. What the end result of the point that you made was that there are two competing narratives. One favors value and one favors growth. And like so many things, you might as well play both sides of this in some way selectively. Have I got that right?
You're close. You're close. The point was that we've got two competing trains of thought, two competing positionings. And we've got a third of the people on one side saying, own growth because inflation is transitory, rates are going to stay low. A third of the people on the other side saying inflation is a risk, rates are going to go up. So you want to be positioned in the value trade and you want to maybe own dividend stocks as well. It feels like an election cycle where you've got a third on one side, a third on the other. And as we all know, the winner is whoever takes the middle. So when you're positioning your portfolio right now into the second half of the year and into 2022, you have to have exposure to both sides. There's going to be times when the market flip-flops and you're going to feel wrong on one side and right on the other, but there's really no way to try to chase that flip-flop. And I think as we get further into the year, we're going to feel that liquidity squeeze as the Fed starts to talk about tapering, which they should, and some of that growth trade probably loses some steam.
How is that? How was I only close with what I said and what you just said?
You didn't use my analogy. I wanted you to use the election analogy.
You wanted to use the... Because it sounded like exactly, I don't know. Okay, so you're talking about...
You were right on, Joe.
You're talking about those in an election, because when you use the election analogy, you said there's people on the left, people on the right, and then all those people in the middle, which in the election these days is about 0.5%, I think, of the people that are not on one side or the other. Maybe in the old days we had independent. But right now we're so...
I think the independents are the swing vote, too.
There's like four people. There's like four of them left. You have to, or one, there might be one in each state. And then their wife is on the other side or their husband's on the other side. It's tough, really, to find any common ground, as we're seeing. Are there selective ways of doing this where you're not quite, you're not quite as strident about either value or growth? Can't you have like a hybrid? Aren't there certain, companies that you can find that have aspects of both, and maybe that'd work?
Sure. I mean, there's middle ground on either side of the equation, right? You can find growthy stocks that are priced at more attractive valuations. You can find value stocks that have a little bit more growth in them, and you can find a little bit more opportunity going forward. What I would say, though, when you're trying to position the portfolio right now, don't try to chase it. And valuation is a terrible timing mechanism. So another thing is a good place to find humility is in the stock market. So valuations are at a level right now that maybe doesn't make a lot of sense if we're looking at the price opportunity going forward. But what could happen is that we thread the needle and the Fed threads the needle well into the end of the year. What I mean by that from a market perspective and a valuation perspective is that as earnings grow, and we're about to have a really great season in earnings, it's off to a good start so far. As earnings grow, valuations naturally come down, but the market can still produce gains. It's just that the valuation multiple will look more realistic as we get closer to the end of the year. The Fed could also thread the needle well by waiting long enough, being patient long enough, and giving us a narrative where it doesn't scare anybody. Inflation is not a bad thing. Inflation means that there's healthy demand in the economy. The bad part is if the Fed makes a mistake or if we have a huge spike in rates that scares the market. And I don't know that that's going to happen.
Shepard Smith here. Thanks for watching CNBC on YouTube.